Hey everyone, welcome to Industry Headlines. He's Kevin Kaufman. I'm Fred Weaver, and this is Industry Headlines for the week of March 23rd, 2020. All right, Kevin, let's jump into the headlines here. Seems like we're releasing headlines every couple days, just trying to keep up with what's going on out there.
Yeah, no doubt. A lot going on this week, not just in the real estate world, but in the world overall, right? Which is impacting real estate in such a big way. So, a couple big things, mostly, let's face it, centered around the coronavirus and the impact that it's having. So, let's hop into those headlines now.
Yeah, so first headline, B of A is deferring payments for borrowers. We'll talk about that. Zillow is now pausing all of their iBuying across 24 markets. That just happened today. The Fed has announced unlimited purchases of some of the securities, right? Like the mortgage-backed securities, and Treasury is trying to save things out there as best they can right now. SoftBank just came out trying to protect their falling stock price and is selling tons of assets. And soon to be in the news is just the amount of overwhelm that loan servicers are about to experience. It's already starting. It's only going to get worse. So, all right, let's jump in.
Yeah. So first thing, big news. With the headline from B of A coming out saying they're going to allow borrowers to pause their mortgage payments. I mean, that's a big deal. You and I built our business in the short sale world, right? And we saw some loan modifications and stuff like that, but never did we see a bank, especially B of A, act nearly as proactively as this to come out. Now, who knows what it'll be like, but the fact that they're this proactive, that says a lot.
Here's what the headline should say. B of A comes out and says, don't go into default. Contact us first for forbearance and deferral options. That's the headline. And the reason, guys, this is a big subtlety that a lot of people are missing. All of your loss mit options historically have only come when people could show that they were already in default on their payments. B of A is coming out and saying, contact us before you go in default on your payments. Prove to us that your income's been affected, and we will tack on some mortgage payments to the back end of your loan and essentially not charge you for the coming months while this hopefully short-term situation is going on. That's huge right there. Just the different tonality of what's happening in 2020 versus what went on 2005 through 2012.
Yeah, totally crazy, different world out there. And I'm sure we're going to have we're going to hear about more about this here in the coming weeks and probably even in the coming days. So let's move on to the next headline here, because these are all sort of under the same theme, right? You mentioned Zillow pausing their iBuying purchasing nationwide amid this coronavirus pandemic. Like, also a big deal, and another company from a different standpoint going out and trying to get in front of this as best they can.
Yeah, they join Opendoor and Redfin. Redfin now being the first to come out, Opendoor being second, and now Zillow to pause iBuying nationwide. There's so many opinions on this right now, from people saying this proves the iBuying model wouldn't work in a down market. Here's my personal opinion, Kevin. Maybe I'll be proved wrong later, although I think it's others that are going to be wrong on this particular topic. Is that these guys are just trying to figure out what the new normal is, while also keeping themselves out of lawsuits from employees and people that were put in situations that they didn't need to be put in. So yeah, of course they don't want to buy homes right now. Neither does nearly anybody else from from that type of funding standpoint, because they don't know where the market's going, and they're based on bulk purchases. Okay, if you're buying one or two homes, but if you're buying in bulk right now, you might want to hit the pause button to figure out what the new normal is before you start again. I don't think this has as much to do with saying that their models won't work in a down market, but there's my opinion inserted into our industry headlines this week.
Yeah, I'm of the same opinion. I'll add on a side note. This wasn't a headline. It's just a Facebook post I've seen going around about people complaining about Opendoor supposedly canceling contracts that they were already in. So not just pausing, but canceling contracts. And from the digging that I was able to do, that does not appear to be true. Did they cancel a contract? Yeah, that happens all the time. And so do regular buyers and sellers cancel contracts prior to close. It is something that happens in real estate every day. So I'll tell you, if they were canceling all of their contracts across the board because of this, that would definitely be something I would question and want to dig further into. But what I'm seeing is some realtors making a lot of noise over something that's not that big a deal. In fact, they probably had a client cancel in the last week or two themselves. And so maybe we should jump to too big of conclusions. Like, it's just a time of uncertainty. Let's see what happens.
Yeah, I'll give them this. If you're out there and you're like, I don't like how the iBuyers handle it. The thing I think that these guys could have handled differently is like, just be honest with us. You're not sure about where to spend your money right now. Some of it is health concerns, but a lot of it is also the financial concerns of not sure where things are going. So I wish they'd address both sides of that coin. That's just me personally. But Kevin, I don't know. I don't claim to be smart enough to understand all of this, but the Fed, I think, just came out unprecedentedly today and said something they've never done before, at least not in recent history, which is announcing unlimited purchases of mortgage-backed securities. Like, they're trying to keep the economy going. Fair enough?
Yeah. So, there was a big package put together last week where it was a lot of money that they were going to be spending on mortgage-backed securities, as well as some other things to keep the money flowing in this country. And what happened is, like, they started going through it pretty quickly, right? And so, yeah, for them to come out and say, hey, there's effectively no limit, we're going to purchase all that we can. That says a lot about the number one, first of all, the ability of the Fed to do that. Second of all, the severity of the problem we're facing if we can't get this under control sooner rather than later. And again, I don't know if this has ever happened before. I don't remember if this ever happened, maybe in '08, but I don't recall it ever being this, like, basically unlimited. So my assumption is that if this isn't like first time ever, it's, one of two times ever in history. So it's a big freaking deal, and it's going to be interesting. We'll see how the market reacts to it, and we'll see what sort of midterm effect this has to the real estate market.
Yep. Also in the financial news, SoftBank, we bring them up because, of course, they have big interest in a lot of technology and also a lot of real estate companies out there. They have agreed today to sell $41 billion with a B worth of their assets. So it seems like their buying spree is probably going to slow down. They've been buying a lot. Now they're selling off some of their assets. And I believe they're doing this to try to help at some level their stock price, which is taking a hit like everybody else's, and also fix up their balance sheet a little bit because it's getting out of whack, right? As the stock price goes down, obviously the valuation of the company goes down, and then you got maybe too much debt on the books, or the debt to asset ratio doesn't look so good. So a lot of companies out there, SoftBank included, trying to figure out how to weather this storm right now.
When you think about SoftBank, they've poured over $100 billion with a B dollars into startups over the last couple of years, right? Open Door comes to mind, WeWork comes to mind, Compass comes to mind. Like, they have a lot of money in the tech / real estate space. I know they're involved in a lot of other companies as well, but they have a concentrated amount in real estate, specifically in real estate tech. And so it's definitely interesting to see what's going on with them saying, hey, we got to pull back a little bit. The one thing I wondered is how much of Open Doors kind of pausing has to do with, like, how tied to this
with
SoftBank's
funding.
If at all,
Yeah.
is it? Yeah, because SoftBank's, like, if I'm not mistaken, they've got the biggest stake in Open Door. And it's not to say that they make all the decisions, but if that's where a lot of the money flows from, then there's then there's obviously that piece that has to be thought about. So yeah, SoftBank is they've got to do some things, tighten the belt. WeWork definitely hurt them. I don't know what Compass looks like for them or not. My guess is Open Doors probably fairly self-sufficient, but who knows? And we'll see what happens. But interesting times right now. Like, the bull market, my friend, is over.
Yeah. Lastly, Kevin, I would just say probably, as this all shakes out, the thing I think we're going to see more of is loan servicers just an overwhelm. There's people out there predicting 30% unemployment rates. I don't know if they'll get that high, if they'll get higher, but you're going to have a lot of people looking for their loan servicer, right? The company that his name is on their mortgage statement every month. Maybe not the name that owns the note on the back end, like the Freddie or the Fannie or the FHA, but the name that's on the front of the mortgage statement where they send their payments. You're going to have those guys fielding a lot of phone calls trying to provide options to people. So it's going to be real interesting to watch how they're navigating these times as well. We know how overwhelmed they got back in the 2008 through 2012 with short sales and how unable to process short sale applications and things like that. be interesting to see what they do and how they handle things this time around based on what they've learned before. So stay tuned for some more industry headlines coming out on that particular topic.
Yeah, so that's it for today, guys. I hope everyone's doing okay out there. If there's anything we can do to support, reach out. Do us a favor, take a look at the website, remarginyourbusiness.com. It's called remarginyourbusiness.com. Check out some of the stuff that Fred and I have going on to just as give back and thank you to the real estate community. Nothing to sell there. So hope you're having a great day. Reach out if there's something we can do for you, and we'll see you again very soon.